Markets are now fully focused on Donald Trump's actions amid the Fed Reserve's pause and the rate cuts announced by the central banks of Canada, Sweden, and the eurozone. Some experts even worried that his policies could hurt the US economy, but for now, let's see what February's economic data has to offer and how Monday's report might affect currency movements. You are watching Traders Calendar for February 3rd. Most reports on this day focus on manufacturing activity. Some of them come from the US analytics firm S&P Global, which calculates indexes based on surveys of purchasing managers from selected companies in each country. These indicators give an early signal for the broader economy. In Australia, for example, the December figure stood at 47.8 points. However, retail sales data will shape the Australian dollar more than other figures issued on February 3rd. According to forecasts, sales growth in December was expected to accelerate from 0.8% to 1%. And this means that the Australian dollar could gain in value. And next comes the parade of manufacturing indexes from S&P Global and others. The eurozone might turn out to be the weakest link in this chain. Meanwhile, China's manufacturing PMI is expected to rise to around 51.6. A figure above 50 points indicate expansion, which is a positive for the country's currency. For China, this also means potential support for oil prices. For comparison, Germany's manufacturing PMI lost 0.7 points in December. In January 25, it could recover more than twice, thus rising from 42.5 to 44.1 points. Although this is far from China's or Australia's levels, the euro should still benefit. Even small gains matter, and an increase over 1.8% is quite significant. A similar report for the eurozone as a whole could show a 1-point increase, with the index rising from 45.1 points to 46.1. After a weak fourth quarter, the new year might bring more optimism for the euro. The UK's manufacturing PMI should also provide a positive boost. However, the expected rise to 48.2 points is still well below the last year's peaks. The highest level was recorded in August at 52.5 points. Even so, the pound will likely welcome this modest increase with a moderate growth. A rise in the pound sterling often supports the euro. Inflation data from the eurozone could further strengthen its position. Consumer prices in the euro area rose from 1.7% in September to 2.4% in December, surpassing the ECB's 2% target. Core inflation was even higher at 2.7%. If price growth continues, the euro could see increased volatility. Canada's manufacturing PMI is also expected to rise, though only slightly, by just 0.1 points. However, the index has been in expansion territory above 50 points for the 4 months now. If in January the indicator rises to 52.2 points, it will mark the fifth consecutive months of growth, supporting the Canadian dollar against the US dollar. Any gains in the Canadian dollar might be short-lived. The fact is that the United States will soon release its own manufacturing data. Since Asia and Europe could report improvement, the world's leading economies are not likely to fall behind. The international S&P Global Manufacturing PMI is expected to climb from 49.4 points to 50.1. The second report from the US Institute for Supply Management suggests a similar movement. Thus, the indicator may climb by 0.5 points to 49.8. These figures will not only reinforce confidence in the US economy, but also boost the US dollar against its major counterparts. Please note that the time of publications is set in a GMT +3. The next video review of Traders Calendar will be released on a Monday, February 3rd. We wish you profitable trading and have a nice weekend. See you!